How are you, everyone? As we expected, Fed's Powell turned hawkish at the Jackson Hole Economic Symposium and warned of some pain ahead as the Fed fights to bring down inflation. Now, Powell pledged that a central bank would use its tools forcibly to attack inflation that was running at the highest level in 40 years. Investors were hoping that Powell would turn dovish and talk about cutting rates in the event of a recession in 2023. However, we did warn in our last video that we did not see the Fed cutting interest rates in 2023, despite fears of a recession, as that would make the Fed look stupid. Powell affirmed that when he said that this is no place to stop or pause, even though benchmark rates are probably around an area considered neither stimulative nor restrictive to growth. That means the Fed will not stop raising interest rates until inflation was brought to under control. Powell elaborated that while higher interest rates, slower growth, and softer labor market conditions will bring down inflation, they will also bring some pain to households and businesses. These, he said, are the unfortunate costs of reducing inflation. And he warned that failure to restore price stability would mean far greater pain. Now, while the personal consumption expenditure price index on Friday showed prices with little change in July, owing largely to a steep drop in energy costs, Powell was quick to add that the Fed's focus is on a broader than a month or two of data, and it will continue pushing ahead until inflation moves closer to its 2% long-range goal. Now, this is what worries us. The inflation now is at 8.5%. The Fed wants to only normalize the situation once inflation drops to 2%. It's got a long way to go. That's why we said in our last video, between now, 8.5% and 2%, you're going to see more volatility in the markets. And as investors, what do? Powell said, we are moving our policy stance purposefully to a level that will be sufficiently restrictive to return inflation to 2%. Looking into the future, the central bank leader added that restoring price stability will likely require maintaining a restrictive policy stance for some time. The historical record cautions strongly against prematurely loosening policy. He's literally telling you that next year, despite recession, the Fed is not going to cut interest rates. These remarks are in line with what Bank of America predicted, that we would see higher rates for longer until inflation dropped. Bank of America hit the nail when it said that the Fed's reaction function has shifted towards bringing inflation down even at the risk of a recession. This means that the Fed would return to normal mode only when the inflation drops to 2%. And this will not happen right away. You have got a Fed that's insistent on making inflation drop to 2% before it stops raising interest rates. So as an investor, I ask you, what do you have to do now? What are you going to do now? You've got a market that's volatile. You've got a stock market that's going up and down, but in between, certain sectors are going up. What do you do to prevent your paper loss from widening, to control a paper loss, and to make profit? What do? You should establish an opposing position that would prevent your paper losses from increasing and also at the same time reduce your paper losses. Secondly, invest in companies that will go up as the main market drops. One good example is the oil and natural gas sector that has done well. Last Friday, the fertilizer sector came alive as Europe plans to stop fertilizer production due to high natural gas prices. So you've got two-pronged strategy here you can do. One is to take an opposing position that will give you profits when the market drops. Secondly, is to invest in companies and sectors that actually go up when the main market is dropping. Before I sign off, do not fear volatility. It is your friend as well as an opportunity to create new wealth. Contact us at bit.ly/algotrader on WhatsApp and subscribe to our YouTube channel at bit.ly/algowealth. And let us show you how you can make profit from volatility and fear and uncertainty. Have a good day.